The Fed kept rates the same, and they have continued on with their indication that they plan 3 rate cuts this year. But I'm not a believer that when rates go down, it's a good thing. And here's why. Guys, why would the Fed cut rates? The Fed cuts the rates to boost the economy. Why would you boost an economy that's doing very well? That is the reason why everybody's so excited about a Fed rate cut, but I am not. I'm not here trying to predict when rate cuts will happen. I've heard every prediction under the sun. 2 months ago, people were expecting 6 or 7 rate cuts this year. And now the Fed is saying, yeah, we're looking at about 3. By the way, they don't know. They're probably saying that to make people feel better so they don't want to kill them. Actually, what happened was stocks went up a ton the second they announced they're keeping rates the same, but indicating they still look at 3 cuts this year. Inflation is coming down, which is great. Inflation is an invisible tax, right? Because if you make $100,000 a year and every year you lose 5% of that, you're losing purchasing power. It's an invisible tax. It's no different than if inflation was 0 and you got charged a 5% tax every single year that increased. So from this standpoint, when we're talking about rates, this is the future according to the Wall Street Journal. This is like the Fed dot plot, but this is showing 2024, 25, 26, and longer. The high, median, and low forecast. And right now, low forecast for 2025 is 2.3%. The low forecast for 2024 is high 3s. Middle forecast is a little bit over 4.5. High forecast a little over 5.5. And it decreases as time goes on. Everybody else this year wanted 6 or 7 cuts that would have taken rates all the way down. Guys, we got spoiled by low rates. Remember, when I was born in 1981, rates were 15, 16, 17%. It was crazy. Why? Because inflation was running wild. And we were coming off a bad decade of inflation, stagflation, inflation with a stagnant economy. Fed Chairman Powell was very adamant on fighting inflation, and I think he did a great job of doing that. But remember, when you have low unemployment, that's inflationary. That's a good economy. When you have GDP growth, that's inflationary. That's a good economy. Their core inflation, which excludes food and energy since they're so volatile, is still well above their goal of 2%. Now, they've actually indicated that they might be altering that a little bit. Who knows? But the Fed's job is full employment and price stability, aka not letting inflation run rampant. Now, we also want to avoid getting too low on inflation and getting close to deflationary. But we all got spoiled in the last 5, 10, 15 years on these low interest rates. There are literally people out there who believe, a lot of people who believe, just refinance your house. If you got 7%, it'll be down to 4 or 5% soon enough. Well, maybe. I have no idea where it's going. But you got to look at history. Look at it right now. Let's pull up the 10-year Treasury. I'm going to go to Market Watch and look at rates. I'm here on Market Watch, guys. Let's look at history. The 10-year Treasury is currently at 4.3%. Does anybody want to guess what the average 10-year Treasury is going back to 1871? I think it's around 4.4%. So it's not like we're at a 10-year Treasury rate right now that's super, super high. No, we're actually at the average, give or take. So I look at this thinking, okay, well, now with that said, what would cause rates to stay lower? Well, if we have slower growth for a longer period of time, they want to spur things on. But here's the deal, guys. As we print more and more money, as we spend more money, have to print money to make up for it. What does that do? That causes inflation. We're in this weird cycle right now. We're printing money, but we're trying to fight inflation. It's all just a very confusing thing. Now here's something interesting. Fed no longer sees benchmark interest rate falling below 3% anytime soon. Previously, the Fed had forecast its benchmark rate to drop to 2.9% by 2026. It is now 3.1%. Guess what, guys? They have no idea what's going to happen. If they knew what was going to happen in the future, we wouldn't be in this mess to begin with. If we always knew the future, we wouldn't have the problems we have, okay? But it's projections. Now, look at this. They're expecting a median interest rate of 4.6% by the end of 2024. And right now we're at 5.25 to 5.5, 3.9% by 2025, and 3.1% by 2026. But what happens if all of a sudden a recession hits us very hard? You better believe they'll drop rates. So you have to ask yourself, would you rather have a recession and low rates or a growing, booming economy with higher rates? That's the give and take. It's hard to have both, except for the last 10 years, but we're coming off of a lot of weird times. We're coming off COVID. We're coming off of a financial crisis. There was a lot of weird stuff going on in the last 10 years. And we're coming off years and years of very, very low inflation. We could get away with a lot more. Now, you're watching this video for one reason. That's to make more money. I don't personally believe that in order to be successful in the markets, you need to be able to predict what's going to happen with feds and all that stuff. But it's still fun to talk about and fun to think about for the future. But investing with confidence takes the right process that works for you and, most importantly, the ability to handle your emotions, the ability to sit there and say, I don't care what the Fed does. That's what I believe. Whatever the Fed does doesn't matter to me. What I care about is buying great companies at great prices. And everyone in the history of this entire world, including Warren Buffett, has made some sort of bad financial decision because of emotion. At some point in their life, this happened. But the real great ones are the ones that handle their emotions well. The real great ones are the ones, Warren Buffett even says, I don't care if somebody came down and told me exactly what the Fed was going to do for the next year. It wouldn't change one thing about how I invest. It's something that I constantly hear from people. What's going to happen? What's going to happen? I have no idea. And when it comes to these topics, it is fun to discuss. It's fun to discuss these stocks that are flying high. It's fun to discuss stocks that are falling. We sometimes have FOMO, fear of missing out on these stocks that are flying. We've all been there. And the right emotions, together with the right process, can greatly decrease your fears of FOMO and the stocks going to zero. You can focus on the truth, what really matters behind the numbers. I personally don't believe the Fed's interest rate policy is going to affect Microsoft in the long run. Microsoft's a great company. What matters is, can you pay the right price? If you pay the right price, you're going to do well because Microsoft will stand the test of time. And that's the best thing that happened to me since investing millions of dollars to create this community in software is realizing that all of this, a lot of this stuff doesn't even matter. And I'm not the best investor in this community, but we love talking about these things. It's still fun to talk about what happens in the economy. And now I have these investors in this community to bounce my ideas off of. And this gives you an opportunity as well. And that is why I created this community. I wanted to hear a different viewpoint on my investment ideas. I wanted to hear what people were saying about what the Fed's going to do. And I use the software and this community to engage every single day about these topics. Every person I know loves talking. Look at Warren Buffett. He's on every single channel all the time. So I've created this community, and if you click the link below, you can get access for 7 full days for only $7 just to test it out and see that it will change the way in which you invest and look at money. So I'll see you in the community. Again, click that link below. With Warren Buffett always talking about how these things don't matter, I used to think to myself, that's BS. But then I started looking at the history. I'm like, okay, wait a second. Since I was born, we've had 15% interest rates. We've had assassination attempts. We've had multiple wars. We've had a 20-year war on terrorism. We've had terrorist attacks. We've had financial crises. We've had all these things have happened. And guess what? The S&P is still up 45x from when I was born. That tells me that most of these things do not matter. There are a few things that drive the economy. And I want to focus on those things. There are a few things that drive companies. You got to focus on those things. Where interest rate policy is going to be, really where it affects you is, are you buying a home? Do you have a home? Should you refinance? If you own a business, can you borrow more to go expand the business? Things like that. But overall, the economy is probably going to do very well. Now, that doesn't mean that I see all this spending going on and get worried about that. Guys, the debt's becoming a real big issue. And don't think for a second the government doesn't want lower interest rates. They're paying really, really high interest charges on the money they've borrowed. It costs a lot of money. So their goal is to sit there and at some point decrease that. I think interest costs have like doubled from $400 billion a year to almost $1 billion a year. $1 trillion a year, I mean. That's an incredible amount of money. So guys, like I was talking about, look at this. Debt held by the public is projected to reach its highest level ever in 2029 at 107%. Even scarier, by 2054, that debt is expected to reach 166. This is not me being fearful, putting fear, uncertainty, and doubt in people's minds. No, it's just saying the debt levels are serious. They absolutely are. And guess what? High inflation will help these debt levels because it'll make GDP go up faster than debt. If you have high inflation, GDP skyrockets, but if you owe $30 trillion in debt, it stays the same whether inflation is 10% or 3%. It stays exactly the same. But we got to stop spending this money. We are just running on deficits all the time. And a lot of people argue that deficit spending is important. Deficit spending is important when times are bad, but you should have surpluses when times are good. So you put money in your coffers. That way, when times are bad, you can stimulate the economy by putting that money in the coffers and have the deficit spending. That's the miss there. And if you like that, that's exactly why we have this channel, because most people don't talk about it that way. Most people just hear, oh, no, deficit spending is okay. No, it's not. If it was okay, then why charge any taxes? If it doesn't matter about printing money, why charge any taxes? It's called modern monetary theory. No, just don't charge taxes. Just pay for all the government money through printing. But we charge a tax for a reason. All right? It doesn't make any sense. It doesn't add up when they say it that way, does it? It's like, oh yeah, why do we charge taxes? It's a very easy argument made against the whole idea of printing lots of money. And the U.S. economy is just like you at home. The more debt you have, you can get away with it for a while. You can kick down the can on the road. You can swipe that credit card so many times, but eventually something's got to give. And every time we borrow today, we're sacrificing from the future. And I hope you see that and hear that and think of it as a way. I'm not being a doomsdayer. I still think the U.S. economy is the best in the world and has a great future. But it can't be that way forever if we keep spending like crazy. Take it to an extreme. What if we had $10 trillion in deficits every year? At what point would we be obsolete? $100 trillion in debt, we'd be spending $5 trillion a year just in interest charges. That wouldn't work. So at some point, we got to sit there and make a decision. And the thing is, we have politicians who just kick the can down the road. So as much as we all hate Powell, I know it's tough, but he's under a lot of scrutiny. I think he's done a great job handling that scrutiny and raising rates against everybody's wishes. And I think that deserves a lot of credit. Now, based on investing, if you want to see the 13 companies I own, please watch this next video, and I go right through them. Thanks very much for your time.